Hi, Tony Sycamore here, Senior Market Analyst at IG in Australia. US stocks gained last week as investors assessed new inflation data and an upward revision to the Michigan Consumer Sentiment Index. The core PCE price index came in at a cool 2.7%, while consumer sentiment climbed to 70.1, its highest in 5 months. The mix of low inflation and strong consumer outlook reinforced the current wave of optimism around the US economy. Looking ahead, the focus will be on Friday's all-important non-farm payrolls. But in the lead-up, there will also be interest in Fed speeches, JOLTS job openings, and ISM data, with the rates market pricing in 38 basis points of easing ahead of the November FOMC meeting. Let's take a look at the charts of the S&P 500 and the Nasdaq to see where they are as they start the new week. All right, the Nasdaq remains in an uptrend, and what we can see into the end of last week, it popped above the psychological 20,000 level after popping above this high from late August, coming in at 19,938. So effectively, we've seen a continuation of this rally from the September lows. What I need to see now is for the Nasdaq to remain above this 20,000, 19,950 support area coming across here. And if that does occur, then I think we test this 20,690 record high before pushing up towards 21,500. So we have a nice, as I mentioned, band of short-term support through here and a more significant layer of support coming in around 19,500. Now, if for whatever reason this rally tends to fade out in the early part of this week and it starts to retrace back into the range which we saw from this area here, I would start to think that a break of 19,500 would be a good sign that potentially the rally has peaked and that we've got another turn lower underway. In terms of where that turn lower can take us to, well, the first stop is this 18,400 area coming from the low of the 6th of September, which is being reinforced by the 200-day moving average. Anywhere below there, then you've also got uptrend support coming in at 18,000. So in a nutshell, positive while it remains above this area here, coming in around 19,950-ish, and also while it remains above support 19,600 to 19,500. Below 19,500, then we have some problems. For the S&P 500, well, there was a positive development last week as it consolidated the break above this 5670, 5650 support area before it pushed on to make new record highs into the latter part of the week. So for me, while the S&P 500 remains above this 5670 to 5650 support area and certainly trades no lower than 5600, then I think we have continuation, or we'll likely see continuation in the S&P 500 up towards 5,800 with scope to 5,850. Conversely, if it was to break below those two significant technical support levels, as I mentioned, this support area coming in here, 5670 to 5650-ish, and if it went below 5,600, then most certainly I'd start to think we've peaked and potentially we're getting a leg lower, initially down towards this 5,400 low from September. If it was to break below there, then potentially we'd start to look towards this 200-day moving average, which is coming in around 52.30, being reinforced by this 51.91 low here from May. And of course, below there, we have the August low coming in around 51.20. Thank you for listening and have a good week ahead.